Good morning, everybody, and thank you for joining us today on this Trio Talk. We have a lot to cover today, and this is actually a two-part series on how to go ahead and help your customers and approach your customers about Trio. So let's go ahead and get started by introducing our guests. We have two guests with us today, and you've probably noticed them before, but I don't think they've actually been on the same Trio Talk together. So let's go ahead and introduce them. Let's start with you, Emma. How are you this morning?
I'm good. Excited to be on.
That's great. Now, tell us just real quick for anyone who's watching who hasn't seen you on Trio Talk before, just real quick what you do at Trio and I guess what you used to do here at Trio since your job's kind of evolved lately.
Yeah. So I started off doing a little bit of marketing and processing, and now I'm kind of veering more in the marketing side. If you're a new Trio Preferred agent, you've probably talked to me recently, and I'm excited to get started in the marketing side.
Perfect. Perfect. Well, Lindsay, you've probably been on here a little bit more than Emma. So, Lindsay, thank you so much for joining us today. If you could go ahead and just quickly kind of introduce yourself, what you do here, because if you're an agent or a lender out there, you'll definitely be involved with what Lindsay's working on.
Yeah, sure. So, hi, I'm Lindsay. Happy to be here this morning. I have been on a couple other times, so I might look a little bit familiar. But I do run our operations for Trio, so I'm heavily involved in managing both our processing teams and also our closing teams. So I do a lot of the behind the scenes work, but I'm sure that you are communicating, with my team one way or the other during the day.
Perfect. Perfect. Well, folks, as always, this is very interactive. This is live right now. So we have an agenda to kind of go over today. We're going to go ahead and talk about everything from release forms and referrals, because we get a lot of questions on that, talking about how to look at the documentation for customers, rental history, how DTI is calculated, self-employment documents, right? These are really important things, especially right now. We're also going to talk about how much money your client may need. And like I said, this is interactive. So if you have a question, if you're on Facebook or if you're on YouTube, if you're on Twitter, however you're joining us today, go ahead and put that in the chat and the questions. We'll go ahead and answer them right here. So let's go ahead and get started here and go ahead and quickly kind of talk about, Lindsay, if we can just kind of quickly kind of go over the underwriting process. I think people are a little hazy on that, and I'd love to make sure that they kind of understand how that works, what that timeline essentially kind of looks like. I think I've gotten that question about 5 times in the last 2 days. So it's clearly something that maybe I didn't cover in the training really well, and it needs to be addressed here. If you can go ahead and cover that.
Yeah, sure. Happy to. We do have our free application on ThinkTrio.com. Once that's submitted, our team does a quick review of just the initial stated information that's provided on that application once it hits our system. If all of that looks okay, we do go ahead and do a soft inquiry Equifax credit pull. So it might show up for that consumer. They might get notified that there's been an inquiry, but it doesn't impact their credit score and it's not visible to other creditors. So that's important to note for those consumers. And then we move it along to processing, provided their credit score and history looks okay to proceed. At that point, they'll start working with our processing team. So they do get handed off to an individual processor within that processing team. But we do tend to handle a lot of our volume as a team. So for a status update, something like that, you might not always be talking to the same processor that you were before, but everybody can see the file and everybody can give a quick status update. But really, once it's moved into the processing team is when we start to review what documents you've already uploaded into the application to support what you stated on that initial submission. And we start requesting anything that might still be missing, anything we might have a question on that's not super clear to us. So that's where you're really starting to heavily work with our team and communicate back and forth. So my best suggestion is to go ahead and, collect income documentation and housing history documentation even before you apply, because it helps just speed everything up. Typically, it's going to take us a couple of days to collect all the information we need from you, depending on how much you've collected in advance. And then once all the documentation is in, our processing team reviews that and sends it over to underwriting, which is usually a 24 to 48 hour review before we can go ahead and issue a decision on that application.
Perfect. Yeah, there's a lot of questions behind how it works, but it's a pretty speedy process, especially once we have all that documentation, right? Now, what does an agent do, or what does a lender do, either one of them, when when that customer has completed that application? What is their next step? And I'm going to go ahead and ask you to go ahead and cover all that.
Yeah, definitely. So the next step is the authorization to release. The customer could actually fill this out in the application. I think it's section number 3. It asks you if you're working with an agent or a loan officer, which is where they'd put your information and give you access to the application. If they forget to do that, you could always do it manually. We do have a tab on our resources page on ThinkTrio that is titled Authorization to Release, where you could fill it out with your client's information, or they could fill it out with your information. And yeah, basically it gives Trio permission to release information. So if you have any questions about the application, we could give you a status update. Sometimes people like to fill that out with family members' information. So that's always available for them too.
Oh, that's fantastic. And this is also another reason why, you don't have to help the customer with the application, but it's always good to maybe, guide them in this and at least let them know, hey, question number 3 on the application asks if they're working with an agent or a lender. This is a great way to make sure that your name is there and you're getting that contact information.
Yeah, you bet.
All right.
And that release actually also allows you to be CC'd on communications that our team sends out to that customer. So you can, without needing to call in, you can in real time see what those communications look like. So it's just a great added benefit for you as well on that side.
Absolutely. And again, this can be done on the application. And if it's not done on the application, that's okay. It can be done after the application as well. All right. So that's the authorization to release, but there's also a referral. So let's go ahead and talk about that, Emma.
Yeah, so we do have our client referral, which you will have to do manually after the client submits their application. You'll need the customer ID, which your client will get once they do submit their application. And then this is the important one, the correct name on the application. Aaron does bring this up in the previous webinars that we used to have, but sometimes people will put like Robert in their application, or their real name is Robert, but they put Rob on the application. So you really just have to communicate with the client just to make sure you have their exact name that they put on the application.
Absolutely. Again, another reason why maybe you want to start off that application with the customer. Again, not necessary, but not required, but it is kind of a good thing. That way you do get everybody's correct names, middle names, juniors, seniors, esquires, whatever they have attached to their name. We want to make sure that is correct in our system and that you're obviously the person representing those folks right there. So perfect. So again, there's the authorization to release form. That's how we can go ahead and make sure that we are communicating to you about the customer. And then there's the referral. That is the manual portion here to make sure that you are getting that referral for that customer. Perfect. Well, let's move on to documentation. We get a lot of questions on what my customer might need in terms of documentation. Let's go ahead and talk about, there we go. Rental history documents. What does a customer need to go ahead and provide here? Emma, why don't you go ahead and take over here and start talking to us a little bit about, what do they kind of need here in order to provide in terms of like a rental history in any sort of way?
Yeah, so we need 24 months of housing history. We could either get that through payment ledger, bank statements, or rental receipts. With the payment ledger, you could typically, if you live in like an official apartment complex, you could typically request just a ledger from your property manager that will show each month payment. It usually like also includes sewer payment and all of that extra stuff on there. That's probably the easiest way. It's the least amount of work. So we always recommend that for all of our clients. If you do not live in an official apartment complex or just want to provide a different way, you could go onto your bank statements. Usually you're able to filter the transaction to only show deposits with to your landlord. So if you pay $1,900 a month, you could only show $1,900 transactions. And we just need to see a screenshot of that. And then just so we could see each month's payment. And then the last option is rental receipts. So sometimes if you pay with money orders, you'll get a receipt. Sometimes people collect them, some don't. So if you could upload photos of that, that'd be great. And then also letters are definitely helpful. It's nice to get their contact information and reach out to the landlords, but it must be verified either through the ledger, bank statements, or receipts.
Okay, so what happens if a customer, and I know this was kind of a little off script, guys, but what happens, we always get this question, they've been living with another family member, right? they're not living in, let's say, a traditional apartment complex somewhere. They're living with a family member for the last year because of COVID, or they've hit a hard patch and they're living with a family member. How is that kind of calculated? What are the ways to go ahead and kind of do that?
Yeah, so we're definitely okay with that. However, the rest of the application will need to be strong. So they will need to have pretty good credit just to be able to move without the rental history. Sometimes if people live with family members, they'll send them $100 a month or something like that. So if they're able to show that, that'd be great. If they don't have anything at all, usually we would collect a utility payment, just so we could see that they are responsible for a monthly payment and they are able to make that on time. Lindsay, do you have anything else to add on that?
Yeah, no, that was a perfect answer. I think one of the main compensating factors we want to see in that case is that they've been saving money. So if they have been living with family, right, and don't have a steady rental payment that they have to make every month, we want to see that that is benefiting their savings account. So we are going to be looking at that to see that they are still in the practice and habit of budgeting for that monthly payment. For us, it's very important to see, we look at things like rent shock, what their payment is currently that they're making versus what's the lease payment that we're going to be approving them for. What's the gap there? And is that going to be a super hard transition for them based on their income level? So we really take a deeper dive into the applications. We're not just looking at the numbers. We're thinking critically about each application and whether it makes sense for that family situation. So I think that's going to be a lot of times that's the deciding factor. If there isn't any housing history to verify, make sure that the customer is still showing us that they can budget and save as though they were making a housing payment if possible.
And just curious, is this probably, I'm just guessing here, maybe one of the areas that takes customers the longest to gather, unless they're living in a condo complex and they can go ahead and just ask the property manager for that sort of letter. Is this maybe one of the hardest things or the slowest things to kind of gather in terms of any sort of documentation that we're usually asking for?
Yeah, definitely. So we always just recommend if you have a client who is going to apply, maybe bring this up to them beforehand so they could get that document ready and upload it at the time of the application, just so we could get the process started sooner.
Yep.
Perfect. Well, good words of advice. And yes, this is obviously something that you're not used to usually kind of needing to ask for, right? So this is why we're addressing it. Want to make sure you guys completely understand. Again, if you have questions, go ahead and put it in the chat. We'll be happy to go ahead and answer it. All right. This is also another question we get quite a bit. How is debt to income calculated? Lindsay, I'm going to hand this one on over to you. I know this is something that you're extremely good at. Can you go ahead and talk to us a little bit about this?
Sure. We're actually taking those debt service payments off of their credit report. So we are taking a look at what auto payments they have, whether there's a mortgage on their credit card payments, and we're taking all of those at face value and adding them into their list of monthly debts. Things that we're not looking at that I've seen on credit reports recently are, self-reported utilities. There are some services that customers can opt into as a method of building credit, which is great. That show their on-time utility payments to, power, water, things like that. But we know that those are subject to change. And so we don't typically include utilities in debt to income when we're reviewing that. For mortgage, another item that we definitely include, but we can also look at a contingent upon the sale of that home. So if a customer is looking to transition maybe from one location to the other, or they have a family home that they're moving out of or downsizing, or whatever the case may be for them, we can take a look at issuing an approval for them contingent upon the sale of that home. And in that case, we would remove that mortgage out to determine their pre-approval amount. We just wouldn't be able to proceed with a new lease for them until we can see proof of that home being sold. Another item that we look at a little bit differently than a mortgage lender.
Lindsay, can I stop you there real quick? I'm so sorry. It was a question on that last point. I just want to make sure I ask it.
Okay.
So if let's say you've got a first home, right, and you're using Trio to get a second home, right? Is that possible? It's kind of in the same sort of boat. So that's why I want to make sure I covered that real
Sure.
quick.
Yeah, that is possible for sure. We would then, if you're planning on keeping both homes, then we would keep that mortgage though included when we're reviewing your application. So your income is going to need to be able to support both that first home and then also your TRIO lease payment.
And what if they rent out their first property? Does that need to, you probably need to have that information prior to the TRIO application, I'm guessing, right? Or
Yes,
maybe
that's one.
okay. Okay.
Yep, that's one of the items we'll collect with the documentation, as we'll ask for a rental agreement and then also verification of rent received so that we can help offset the mortgage with those rental payments that are coming in.
Great. Sorry to bother you.
No.
I know that we get that question quite a bit, and it's kind of in that same realm right there. Sorry, go ahead and continue.
No, that's okay. That's perfect. The other item that I was going to move on to is just the student loans that we look at a little bit differently than a mortgage lender. If they are deferred or there's no payment being made on them, we actually don't include them in our review for a lease payment qualifier. And then collections, we do actually take a look at them, everything except medical. We don't include medical. But any other collection we take over the 36-month term of their lease. And our thinking behind that is that those collections should be paid off or be able to be paid off reasonably within the lease term in order to have a strong application when they're getting ready to purchase that home from TRIO.
Makes sense. Absolutely. Can you kind of cover the payment maximum of no more than a third of the income? I think this one is always, I always say it's not really flashy, but it's actually one of my favorite things that we do. Can you kind of cover that?
Yeah, sure. We try to keep it as reasonable as possible for folks, right? The last thing that we want is for somebody to end up house poor in making their, housing payment that's overextending them. So again, when I mentioned previously that we are, really thinking critically about our applications and the amounts that we approve our customers for, this is one of those items that we're thinking about. We want to make sure, we know that their utilities are going to come on top of their lease payment. And we know that, in some cases they have high HOA dues or they have other items that they need to pay for in their home to maintain their home and to just, live life. So we want to make sure that folks are able to comfortably afford their lease payment. And so we do cap that at about a third of their monthly income. But then we do also take into account their debts on the other side. So it's going to be the lower of the two, either 50% of their debt to income ratio or a third of their monthly income.
Yeah, it's always just a good rule of thumb, right? Wherever you're living, not to pay more than that. And like you said, so you can still have a life too, right? And do other things.
Enjoy,
enjoy life, go to the movies and restaurants and have a life. So, and save, right? That's always an important one right there. Well, perfect. That's fantastic. Now let's tackle that third thing that we always get a lot of questions on, and that's self-employment documents. And I'm going to hand this one on over to you, Emma. Can you go ahead and talk to us? What are the documentations that we're looking for, and that, especially if you have a customer that is self-employed, what can they go ahead and provide to us to go ahead and show us, their profits and everything like that?
Yeah, so a lot of our clients at TRIO are actually self-employed, or a lot are W-2 with kind of like a side hustle who have maybe like a hairstylist or something like that on the side. But for self-employed individuals, we do need a most recent tax return, business license. Some states don't require a business license. I think Arizona is one of them. And then 3 months of bank statements from all accounts. So that's including personal and then business. And then we'll also need a profit and loss statement. The profit and loss is something that a lot of people have questions on. We do have a template that we give to our clients if they don't already have something that they're currently tracking their income with, but it basically tells us where their profits are coming from and then what their monthly debts are within their business, just so we're also not double counting it in the DTI. So if you're maybe paying like for gas, if you're a DoorDash driver or something like that, you're obviously spending a lot of money on gas and just kind of other debts. So it gives us an idea of the exact amount that you're making and then your net profit. And then we'll also need to be able to track that within the bank statements. So if maybe your business is getting income through Zelle or Venmo, we'll definitely need to be able to track everything. Or if it's cash, then you will need to deposit everything into your bank account. And then, yeah, so if the business is a little tricky and sometimes people don't have a business bank account, we will need an explanation on what deposits are business and personal, just so we are tracking your income correctly.
It's a lot, but it's super important. I mean,
A lot of
if you run a
information.
business, this is what you need to do anyway, right? So you should be having this
Yeah.
documentation. It's not always, you're not always used to sharing it with other folks, right? But that's what we need, obviously, to go ahead and see, if this is going to be the right program for you, and to obviously track any sort of income and anything like that. Lindsay, is there anything you want to add to this in any sort of way?
Sure. I mean, that's perfect on the documentation. I will just add for our tax return why we ask for it. When we're looking at income and trying to determine income for a customer, we're not necessarily looking at what they reported on their tax return. A lot of our customers also have new businesses where, maybe they were only in business for a couple of months last year. And so their tax return is not going to be an accurate reflection of what their income is today. So we're really looking at the profit and loss and the bank statements to help us provide that accurate cash flow for what their business looks like, and to see the consistency. A good example would be, a customer where they are maybe a tax preparer, and so their income fluctuates a lot throughout the year. And so a tax return helps us see, overall what their income might look like, but their cash flow might look a little bit different today, or vice versa, right? For that new person or new business where a tax return might show lower income versus higher cash flow today. And so it's always really helpful, especially with new businesses or tricky businesses, is to make sure that you're providing that explanation. Our team will ask you to explain what those deposits are, what those expenses are, like Emma said, to make sure we're not double counting anything, especially for somebody like a 1099 truck driver. If that car payment, right, we want to make sure that that could be a really big debt that's in there. We want to make sure we're not counting that twice. So I do want to ask for your patience too. If our team is asking a lot of questions about your income, we're just trying to do our best to understand exactly what's going on so that we can get you qualified in the best way.
That's great. And I want to jump on something that Emma said a little bit earlier. A lot of our customers are, self-employed, small business owners, 1099. So anytime you hear, you meet a customer and they say to you, I own a small business or anything like that, please automatically think, maybe Trio would be the best option for them, because it's going to be hard for them to get that traditional home loan. We're going to be a great option for them. Yes, we do ask for a lot, but like Lindsay said, we're just trying to understand, how is their income coming in? How much are they actually bringing into the house, and can go ahead and go towards home ownership. So this is a really, really important one right here. And thank you both for talking about it, because this is something that we get a lot of questions about right here. And I would say the last thing we probably get the most questions on is, how much does my client need in terms of money? How much does Trio cost essentially upfront for that customer to go ahead and get into this particular property? Lindsay, I'm going to throw this one back on over to you, because a lot of people think, oh, it's one big lump sum all at the beginning, or it's small lump sums throughout. How does this work? How much does a customer actually need when they're getting started with Trio?
Yeah, sure. And, I would love to say, it's X amount, but it does fluctuate. So it depends a lot on the purchase price of the property too, right? And what is negotiated, because there are some items that are percentage based. So for our Trio lease fees, our standard upfront fees, it's a 1% inception fee. That's 1% of the purchase price. And then a $1,295, so $1,295 underwriting and program fee. Those are our two upfront fees that are on every single lease. Customers do have an earnest money deposit that they'll make when they first go under contract, and that's subject to what's negotiated in the contract. A lot of agents are able to negotiate that to be roughly 1%, in which case it will almost directly, offset that 1% inception fee that we charge, because the earnest money does get credited against those one-time lease fees that I mentioned. In Texas, there's also an option fee that gets paid to the seller. Excuse me. And that does get credited as well along with the earnest money. So the customer does not double pay on those items. They do get credited for their earnest money. They do get credited for any option fee that they pay in. They are responsible for their home inspection if that home is not new construction. So if it's a resale home, they are responsible for paying that inspection fee directly to the inspection company. And then the other item they should be prepared for, which I know we get a lot of questions about, is the 3% closing costs. So especially in today's market where it's a seller's market, buyers don't seem to be able to ask for a whole lot, right? It can be really, really tricky. So we do have a 3% closing cost requirement that needs to come from somewhere on all of our contracts. So either seller, customer, sometimes agents contribute a portion of their commission for that. So it can be a combination of where that comes from. But ultimately, it comes down to if that is not provided by the seller or some other source, the customer is responsible for that. So it will show up in their pricing estimate that goes out to them once they go under contract if it's not somewhere else in the contract. They do have a couple of options of how they can pay for that. So they can either pay for it upfront in a lump sum when they pay the rest of their lease signing fees on the day that they sign their lease, or they can ask to finance a portion of that. So we can finance up to 2% of that 3% amount. So what we're seeing a lot of agents do is to ask a seller, instead of asking for 3%, they're asking to cover at least that 1%. And then we have customers financing the other 2%. So it helps save them on the upfront cost. But it is something that's then in addition to their lease payment that they're making. So our team does need to review that to, again, make sure that customer is not overextending themselves by adding that payment onto their lease payment, right? We want to make sure that we're still within a good ratio for what their monthly obligation is according to their income. So we do have a couple of different options to help mitigate that, but that's probably the one item we get the most questions about. And then after their lease signing, the other item that they should keep in mind for coming up before closing is their first month's lease payment. We do require a full first month's lease payment to be paid at least 5 days prior to closing. Some customers opt to pay it sooner just to get it out of the way. They have the funds, they can go ahead and make the payment, and that's wonderful. But the last day to pay that is 5 days prior to your closing date. And then what we do is once you close, we prorate your second month based on the day that you closed. So you don't ever end up paying a lease payment for days that you didn't have access to the house. We just kind of charge it in reverse. We charge a first full month, and then we charge a proration on your second month, and then you go back to making your full payments.
I just want to point out we're kind of missing something in this list here, and it's called down payment, right? It's not needed for the customer, right?
True.
Everything else is absolutely needed here, right? Earnest money is needed for, obviously, to make an offer on a home inspection. That's a no-brainer, right? We obviously need that in order to make sure we're living in a safe dwelling, right? Closing costs, obviously, that makes a lot of sense. The lease fees, obviously, the fee to Trio, and the first month's payment, obviously, that's needed. But the nice thing here is that there's no down payment here, right? And so customers, again, they don't need that down payment with Trio. And so I don't think I share that enough when in the training. So please realize that they don't need that when they're coming to Trio. So if you have customers, in fact, I just got a question about it this morning. If you have customers that need down payment assistance or don't have down payment, Trio is a great option for them, right? So this is really fantastic right here, how much they need. And this is obviously, like you said, Lindsay, this is kind of spread out over at least a month or probably 2 months in order to go ahead and make this happen. So hey, looks like we're doing a good job because we got a Go Team Trio. You guys rock. So thank you so much, whoever that was. Well, like I said before, this is a 2-part series. So what we're going to cover next time, and that's actually, I think you said it's 2 weeks from now, right? It's the first Wednesday of the month was actually July 7th. So after 4th of July, after the holiday and everything like that. But we're going to go over all the tools and calculators and the different things that you can find on our website that are super helpful. The home price calculator, the comparison table, how to look up the Trio FHA limit in the county that you're working in or that your customer is looking to go ahead and purchase, right? So there's a lot of different things on our website. We want to make sure you guys understand how to use them and where to find them. Emma, Lindsay, thank you so much for joining us. Wow, look at us, right on time at 30 minutes. Go us, right? Well, you guys rock. How about that? So thank you so much for joining us again, everybody. And Emma and Lindsay, thank you again. We will see you here in 2 weeks. Take care, everybody. Bye-bye.
Thank
Bye,
you.
guys. Thank you.
Bye-bye.